Hey traders, it's been a long time coming, but we finally have had a major facelift to our interest rate tracker, and it's really exciting. And it already helped us significantly today trading the pound dollar and the pound in general. So I want to walk you through it and show you what happened. It's so cool. So what are we looking at? Well, let's start breaking down the screen. We're looking at the Bank of England rate tracker, and you can see here this is the current rate, 4.25%. And how is this thing built? Well, it's built by tracking the overnight index swap market. And that market, the overnight index swap market, is where traders express an expectation of where policy will be on specific meeting dates. So current rate's 4.25%. The expected rate for the next meeting is 4%, which means the market's anticipating a 25 basis point rate cut. Remember, rate cuts tend to weaken the currency, rate hikes tend to strengthen the currency, right? And so that move is shown here, that expectation down, 22.14 basis points. Most likely move, cut 4%, and that's at 87% chance right now. Now, one of the really cool things that we've added is this graph right here, which is the real-time tracking throughout the day of what's happening on the overnight index swap market. And why this can be so helpful is that this is the purest market really that tracks what the central bank is going to do. So it can be a major indicator for where the currency, if you're trading pound dollar, pound CAD, whatever, is going to go on that day. So this morning, a news headline broke. We can see it here on our Financial Source newsfeed. So the Bank of England Governor Bailey says the MPC is prepared to make a larger rate reduction if the jobs market shows signs of pronounced slowdown, according to the Times. Look at the time here. It's 6:09 right here. Right now, if we go over to our tracker, what do you see? 6:18, boom. And there's your fall over the next like 30, 40 minutes. You go from -9 basis points down to -21. 22, and throughout the rest of the day, you hold lower throughout the rest of the entire day. And you can see that this is a little more of a significant move than other central banks for the same time period, right? So this, you got like, this is like zero point 0.5 to 0.6, and it comes right back down. There's nothing sustained. It's just gyrating. This is like 0.72 to like, 0.3. So there isn't much going on here, all kind of under 1 basis point, right? But here you got like 3-4 basis point move, 19 to 22, 3 basis point move. So it's a little more significant. So when you're looking to then trade the market, right, and you're looking at the pound dollar, for example, this is around the area, the time frame where this news announcement happened. Had you had that little extra piece of information, right, you might be thinking, okay, this is a bottom, going to buy the pound. But should you really be buying the pound when you have this tracker that showed you that the market, the overnight interest rate swap market, is pricing in more easing actively throughout the day, right? And it's sustained. It's not popping back up. It's sustained throughout the day. And if you look at all of the major pound pairs, pound Swiss falls throughout the day. Pound CAD falls throughout the day. Pound New Zealand, this is this is right around 6, 7, right in here. This is where it was happening. Falls throughout the day. Pound dollar, of course, falls throughout the day, right? So you get this huge clue to be able to say, okay, no, the pound should be going lower, at least in this intraday session, right? Now you got CPI tomorrow, and there's lots of variables, day to day. But at least for right now, this is where the bias is, right? The other way it can help you is, let's say you didn't get in up in here, but you're looking to kind of short a pullback and you want to take a few pips. Well, if you have the knowledge and you go back to this tracker and you see this move is sustained, it's not popping up, it's just sustained here. Well, you have more confidence now to short this pair on a slight pullback, right? So if it's pound dollar, you get a little pullback, you're shorting it down, right? Pound New Zealand, little pullback, you're shorting it down, right? And you have that confidence because you have this other tool that is telling you, okay, traders in another market are saying, no, more easing's coming. More easing's coming, the pound gets weaker. I'll show you two other tools that also would have helped as well, because maybe you say, okay, fine, but which currency pair do I choose? So to help you out with that, we have our currency pair or snapshot. So it's like a strength indicator, but it has our own proprietary formula for exactly what we're calculating to show that that currency is strong or weak, right? And so there's a number of fundamental factors that we consider, and we put them all together. And it's only updated about once per day, so this is a longer term, type thing. But what you're able to see in a snapshot is, okay, pound dollar is fairly weak, so I could consider pound dollar. Pound Aussie, okay, maybe not, because it's about even. Pound Swiss, okay, I'll consider that. Pound New Zealand, I'll consider that as well. And so when you put that together, you can take a look at those three pairs: pound New Zealand, pound Swiss, and pound dollar. If you look at them all up here, right? Pound Swiss, easy sell off. Pound dollar, easy sell off. Pound New Zealand, sell off throughout the rest of the day, right? That just gives you such a simplified extra leg up to your trading. But we've got one more for you. And so the last one to incorporate, which was just cool because I was just seeing this today and I was like, oh, these things all fit together so well. But the last factor is our implied volatility indicator. Now, if you're not familiar with this, what we're able to do is we're able to get levels from the options market, which options traders are saying, okay, these are major levels, major potential turning points where the market could get exhausted if it's going up or going down, right? And these are either reversals or at least a place where the market will pause. You'll see how helpful they can be to your trading in this case. So let's say in this case, we were shorting the pound Swiss, right? And we're like, okay, maybe you're in from here, maybe you're in from here. And you're like, okay, where's a good place that I should take profit, right? And so you go over to the implied volatility tracker, and you look for the pound Swiss. And so we can find the pound Swiss right, if I can find it. Here we go. Pound Swiss. So we want to look for the lower bound standard deviation. So here we see the levels, 1.0775. So let's see where we are, 1.0775. Okay, so we've moved through the first standard deviation. So I look at the next one, the 1.0735 then. If you look at the 1.0735, this gives you this level right up here. So you could have considered taking profit right in here, or let's see if we went down to the third standard deviation, 1.0694. And if you looked at this, it came in just a few points short of the 1.0694. So this would have been like another level to look as a take profit. Okay, let's say you were trading the pound CAD instead. So if you look at the pound CAD, we go over here to our volatility tracker and we plug in the pound CAD, which should be here. And on the lower bound, we're looking at the 1.8465. So we've broken through that. And so another one would be the second standard deviation, which would be here, the 1.8397. And this one here, 83.97, you can see it stop right here and starts consolidating around that level, right? So it would have given you a nice take profit zone. Let's go over to the pound New Zealand. We plug in the pound New Zealand here. Look at the lower bound, 2.2413. And you can see 2.24, what did I say? Pound New Zealand, 2.2413, 2.24. So we're nowhere close to it. So this one didn't move that much. So that wasn't as helpful. And then the last one is the pound dollar. So if we look over again at our volatility tracker, pound dollar here, we have the 135.11 and the 134.49. We get on here, 1.3449 would have been right here. So take profit zone right here. And then let's see where we're getting, if we're getting down to that next lower bound, 1.3387. So we still have a little ways to go to the 87, but we might just get there actually. So you can see how you can piece this whole thing together, right? And it all started with a comment made by a major central banker, which if you didn't have this tool, you would have really had no idea, is this significant? Should I pay attention to it or not? But what this enables you to see is, no, in real time for this session, this is actually impacting the market, right? And so it's not just some random comment. Interest rate traders have said more easing is coming. And so what that means is that's a nice strong signal to say that at least in the short term, that currency could weaken, right? So, and then you put together the strength meter, and you put together also the volatility tracker, right? You put all these tools together and you can see how you can build a bit of that edge. So hope it was helpful. We're excited because we have a fun new tool to use, but hope you guys enjoyed as much as we do. And I'll see you in the next video.